Good morning, everybody. Thanks for joining us on this next Bright Ideas session with our guest speaker, Reza Hooda. I'm delighted to have Reza come on the session today. For those of you that were on the last couple of sessions over the last 2 weeks, we've delivered some really great content. But I really respect Reza. I've seen his content and seen him in the industry. I reached out to him and said, I'd love for you to come and share some of your guidance, your advice with our Bright users. And Reza very kindly offered to take the time to come and speak to us all today. So Reza, I really appreciate your time, and I'm delighted to see that the Bright users are coming in their droves at the moment.
Pleasure to be here, Jonathan. I can't wait to get started.
Now, I should say that as we're going through the presentation today, please feel free to drop questions in the questions box, which is on the control panel on the right-hand side. There's also the chat box as well, which if you want to leave any comments, you're welcome to do so. As Reza's kind of given his presentation today, I'll be monitoring both the questions and the chat, and we'll be asking Reza the questions at the end of the session. Apart from that, Reza, I think that's kind of the housekeeping. I should say that the session is being recorded, and everybody who's registered will receive a follow-up email with a link to the recording. But apart from that, I think we're good to go.
Fantastic. Okay, well, let's get it going. Let's get some energy to today's session. So if you're here, start typing away. Let me know. Say hello in the chat box. Let me know where you're dialing in from today. Whereabouts in the world are you based? Let me know the city. So, you know, let's make it a bit more interactive, because when we make it fun and interactive, then we're probably more likely to learn a bit more and get more out of the session. So who's here? Let me know in the chat box before we get cracking. We'll give it another minute or so to let other people join. Let me see if there's any familiar faces, any familiar names that I might know in the audience. So, hello, everyone. Oh, good to see some on the question box. People are coming through. Pete from Crew, good morning to you. Good morning to Atul from somewhere. Oh, hi from Chester from Angela. Cannot add a chat, says Roger. Yeah, hopefully Jonathan's working on that and we'll get it sorted. Hello, Anne from Cumbernauld. Nice of you to put your name in here, and good to see you here, Femi. Good to see you from Kent as well. Okay, so let's get started, and Jonathan hopefully will let us know when the chat box is working again. Good morning to you, Anthony. So I'm guessing for most of you, this is not going to be your first webinar. So the first thing I want to mention is, if you've struggled with growing your firm, making the money you desire, getting clients, having the free time that you want, that it's not your fault. There's a lot of information out there and it can be confusing, and many a times it's that information overload that keeps you from success, and that is okay. So my agenda in the small time that we have here today is to give you little effort strategies that will provide a big impact in your business and your life. So my aim is to create confidence where there was once uncertainty, to shatter confusion and replace it with clarity, and to share and show you exactly what to do, when to do it, and how to do it to be able to get the results that you want. So my goal is to unlock within you the true potential I know you have to make your own unique and wonderful dent in the universe. But if nothing else, then I'm here to make you lots of money, and lots of it. Does that sound good? So what I need from you is, I'm going to give you my A-level best today in the brief time that we have here today, because I have faith that you will actually use what I share with you, because nothing pains me more than someone encountering a life-changing idea and letting it go to waste. So I'm going to give you my best, and in return I ask for your kind attention to turn off those distractions, turn off your Outlook inbox, to put your phone on focus mode, and get a pen and paper to hand to take notes, or your remarkable tablet, whatever you have in front of you, because I promise that if you implement what I show you on today's webinar, then you will no doubt get phenomenal results. Because my epiphany moment came when I attended an unexpected webinar some 10, 12 years ago, which gave me my aha moment and set me on my road to transformation. I didn't know it at the time, but I wouldn't be here and talking to you about this had it not been for that one unexpected webinar that I attended. So this one could have the same impact for you. So I ask you right now, as we go through this, to see yourself doing what I show you, to make it yours, to see the future show up right now in the present. Because as a wise man once said, thoughts become things. If you see it in your mind, you'll hold it in your hand. So when you think about what I show you today, and if you do that, you will hold it in your hand. So is it okay for us to move forward with this agreement? So don't just nod your head and say to yourself, this is serious stuff. Prove it to me with the simplest yet most powerful of gestures, with a yes in the chat box, a big fat yes in the chat box. Hopefully the chat box is working now. Try it out. If not, then put it in the question box. When see a few yeses coming in, we'll get started. Chat
It's
box
probably
not
best
working yet?
no, I was just about to say, it's probably best to just use the question box. For the life of me, I can't figure out why it's not working, to be honest with you. But yeah.
That's a shame. Okay, so use the chat box then, everyone. Sorry, the question box rather, because there seems to be a problem with the chat box. But hopefully, if you do manage to figure it out, Jonathan, put a message in the chat box to let everyone know it's working, and hopefully we can use it again, because there's a few prompts I have in between just to keep it interactive. So it would be useful if the chat box is working, but as it isn't, nothing we can do. Just put it in the question box instead. Thank you, everyone. So yes coming in from Angela, yes from Roger, yes from Anne, yes from Janisha, from Atul, from Shamsul, from Gerard, from Anthony. Fantastic. All right, well, let's get started. So you can do this. If you've been concerned in the past that you can't succeed with winning dream clients, paying you those dream fees that you hear other accountants getting, building a profitable practice because you think you're too small or too inexperienced, then I want to put those fears to rest. You can do this. You just need the right person to explain it to you. So that's what we're here for. I want to help you. I know you have a dream to build a business that gives you that time and financial freedom that you deserve. And I want to show you how to make it happen during this webinar. So hi, I'm Reza. For those of you that don't know me, then here is a little bit about me. My background is not probably too dissimilar from yours. I started my journey at PwC. I qualified as an accountant there, and I got to manager within the tax department, qualifying as an ACA and a CTA. In 2008, it got to the point where I was I wanted to be in control of my own destiny. I didn't want to wait 10 years to get to partner. So the opportunity came along for me to buy into a small practice. I wanted to set up a separate business, but that amazing idea eluded me. But then this opportunity came in. My father-in-law was actually selling his practice. We got talking, and we then agreed terms for me to buy his practice down on the south coast of Hampshire, near Southampton. So I bought in to the practice in 2008, and even though I trained with PwC, I had no idea how to run an accountancy business, because nobody teaches you when you do your accountancy exams how to price your services, how to sell, how to manage a team, how to win new clients. So I ended up just winging it, and I made all the mistakes under the sun. It got to the point where 4 or 5 years later, I was working crazy long hours for not enough money. The business was supposed to give me that time and financial freedom to be able to travel the world, to make the most of spending time with the kids, but it didn't happen. I was working crazy long hours. My wife was raising the kids single-handedly. We had 4 kids in the space of 5 years, but I was never able to actually spend any quality time with them when they were really young. So something had to change, because if it didn't, then the business could have gone bust, and I'd have to go back to the day job, which would have been a big disaster and a massive embarrassment. So it got to the point where I decided, or I came across an opportunity to attend a webinar, and I realized that there's a world out there that I didn't know about. I didn't know what I didn't know. And I realized back then that I had to invest in myself to become a better business owner, to be able to do the best to transform my results and ultimately my life. Because at the time, it wasn't a very pleasant place to be in. So I went on a journey learning from top mentors and experts from inside and outside the profession. And after having learned from kind of what's possible, I started to implement what I was doing. I started to get results. And within the space of 24 months, we went from struggling, frustrated, chasing clients for invoices of £500 to £1,000 to winning a one-off project of £135,000 and taking our firm to nearly £1 million of revenue with just 7 people. And best of all, doing this whilst working less than 5 hours a week in the practice. A few years later, I got my practice to run completely without me, and I founded the Profitable Accountants Community, which is a community of 100+ accountants where I mentor and coach, and we together help ourselves to share best practices, ideas to build more profitable, successful, and impactful accounting firms. So here is kind of a snapshot to kind of show you what is possible. Now, I do this purely to give you that inspiration, to show you what's possible, because I was once in your shoes. I was working crazy long hours. I wasn't making enough money. I went on a journey of learning from others and implement what I was learning. And we went, as you can see, 2008 here, when I bought the practice, turnover was just under 130,000, hardly anything in it profit. After 10 years, that transformed, nearly 900K of turnover and over 600,000 of profit. Now, that took me 10 long years, 10 hard years of making all the mistakes on that son. I don't want it to take you 10 years to get to where you want to be. And that's why we're here today. So I can share with you what took me years of learning to figure out what works and what doesn't, so you can shortcut your success. Because smart people learn from their mistakes, but the real sharp ones learn from the mistakes of others. So you clearly are very sharp because you're here today. And I'm absolutely, this is exactly what I'm going to be sharing my mistakes so you don't make the same ones and can get to where you want to a lot faster than I did. So what are we going to learn today? We're going to learn, absolutely, what is that big opportunity to 10x our fees, even in a recession? How you can turn your least profitable service into the most profitable by simply changing its name. How you can command 5-digit fees even as a small sole practitioner, and why now is absolutely the best time to take advantage of this opportunity, and what to do to get ahead. Does that sound good? Let me know. Give me encouragement. Give me some feedback in the chat box, or the question box rather, to let me know that you are still here, that you are taking notes, that this is sounding good, to give me that motivation to continue. So can I have a few yeses in the chat box, and we will get cracking. Okay, so we're going to do this through 3 insights. As I see the chat box is still not working, hopefully Jonathan's on the case. So here's what we're going to cover and how we're going to tackle everything today. There's 3 insights that I want to go with you over the course of the next 60 minutes or so. Firstly, why the opportunity is now and how you can take advantage, what that opportunity is to earn those high 5-digit recurring fees, and how to charge higher prices to have better clients working with you. So let's get started with the first one. Thank you, Angela and Jordan and Roger, for your yeses in the question box. Okay, so let me ask you a question. And it's a bit annoying I can't use the chat box, but we use the question box. Pre-pandemic, let me know with a percentage, what percentage of your clients were not local to you? So what percentage of clients were not from your town pre-pandemic? Let me know with a percentage. It doesn't have to be exact. You know, was it 80%? Was it 90%? Was it 100%? What percentage of your clients were not local to you, pre-pandemic? So let me know with a few, some of you can share your figures, and then I'll ask you a secondary question about what it is now, to then hopefully make the point that I'm going to make in a minute. So let me know in the Q&A box, what percentage of your clients were not local to you pre-pandemic? So I'm guessing there's probably going to be a small percentage. So was it 5%? Was it 10%? Was it 15%? Was it 0%? What percentage were not local to you pre-pandemic? Let me know in the Q&A box. So we're coming out with 30%, 98%. So I'm guessing that's the other way around. So what were not local to you? We've got 2%, 5%, 60%. Okay. By and large, when I've done this with groups of accountants, then generally pre-pandemic, it was anywhere between, say, 0% and 20%, where 80% of clients were generally local to accountants in their town, in their city, and 20% were outside. So yeah, Angela, that sounds about right. 1%. Shamsul saying 20%. Probably seems a long, long time ago now, doesn't it? Pre-pandemic. Okay, 0%. Right, now I want you to tell me what percentage of your clients are not local to you post-pandemic, of your new clients. What percentage of new client inquiries are not local to you? And let's see if there's a correlation between whether it's a bit higher than the percentages just mentioned for pre-pandemic. So post-pandemic, right now, what inquiries, what percentage of your new clients are not local to you? Let's see if that number is a bit higher. So Anna's saying 10%. Okay, good. I don't know whether you said 5%, so that's doubled. So your new clients are not local to you. That number is doubled for you, Anne. Anybody else? 99%, fantastic, of your clients are not local to you. 3% says Kelvin. Okay. Anyone else? 0% says Roger. Okay. Oh, massive opportunity for you, Roger. Anyone else? Anyone else want to give it a go? What percentage of your new clients are not local to you? Shamsul says 50%. Web. Excellent. Okay. Well, here is the point. Here, let me tell you why that now is the biggest opportunity in a lifetime for us accountants to take advantage, because something massive happened in the pandemic. What has happened is that buyer behavior has changed. people are more comfortable talking to you remotely. You probably have had more Zoom calls in the last 3 years than you did in the last 15 years before that, or since you started your practice. People are comfortable getting on Zoom and talking to you. You are able to service clients from anywhere because you're using cloud technology. Everything's on the cloud. You've got apps in place that people can send you information through. So what does that actually mean for us? That means that if you get your messaging right, and if you get your target audience right, then you can get business from anywhere in the country. Now, don't just, this is not a point that should just fly over our head. This represents a massive opportunity for us. And many accountants it hasn't caught on yet. Some accountants who haven't actually embraced the potential to get clients from anywhere in the country are not the ones that are going to grow. The ones that are growing are the ones that have actually cottoned on to the fact that people are comfortable getting on a Zoom call, sending information to electronically, which means that get your messaging right, get your target audience right, and you can command and get inquiries from anywhere in the country. In the 6 months when the pandemic started, most accountants were kind of beavering down and getting on with stuff and not knowing what was happening. I decided to launch a campaign of going out there and doing Facebook ads to drive inquiries for our property tax niche. And in just 6 months, we added over £150,000 of revenue. And these came from the majority, 95% came from outside of our local town. So the penny really dropped for me when this happened, that wow, this is a massive opportunity now. We're in lockdown and everyone is happy doing Zoom calls. This is only going to continue. It's not going to slow down. It's just a new way of life. So how do we take advantage? We get really clear on who we serve. And I'll give you a practical example of how I've done this. When you get clear on who you serve, so for example, if you are niching down, you've probably heard the fact that you need to niche your accounting firm, you need to choose an audience. Why do you need to do that? Because when you do that, then because ordinarily, if you try and appeal to everyone, you appeal to no one. So to get noticed, you have to actually be really specific on who it is that you want to attract. So is it property owners? Is it content creators? Is it doctors? Is it dentists? Is it chiropractors? Because when you do that, then your marketing becomes so much easier. Because marketing is all about finding that person who has a specific need or problem to know, like, or trust you. You don't know what someone's problems are if you don't know who they are. So get the who right, then the what, where, and how to find them becomes so much easier. And then you could then start to create content around the specific needs and problems of your target audience. Everything becomes so much clearer when you choose a specific audience. That could be niching by industry, or it could be niching by activity. So for example, you could niche by a specific activity that you do within a vertical. For example, e-commerce businesses. You could niche by life cycle. So for example, seed funded businesses, they've got the cash, and that is a very specific type of audience you could niche down into. Because when you try and appeal to everyone, you appeal to no one. And why should someone choose you over another accountant? You've got to differentiate yourself. And when you differentiate yourself, that's when people will start to take notice. That's when your marketing will start working. That's when you start to get inquiries. Because the more laser focused you are, the easier it will be to find your ideal clients. And when you do, as I said, when you get the who right, the what, where, and how to find your clients becomes so much easier. And because you're a specialist, you can charge more. Who earns more, the brain surgeon or the GP? The brain surgeon, because they're a specialist. When you're a specialist, you can charge more. You charge a premium. You can charge more, and then doing the work becomes so much easier because you've got similar clients. And when you've got similar clients, then your team can put in place processes to cut through and to know everything there is to know about that particular audience. You go narrow and you go deep into one particular area, and ultimately become more profitable because you're charging more. It's going to cost you less because you don't have to take on as many resources to service the clients that you have, because they're all the same. So each of your team members can handle more capacity, and therefore you become more profitable. And there's less competition when you're a specialist. So you move into that blue ocean rather than that bloody red ocean of other accountants kind of going after the same clients. When I first started out, I tried everything to grow my practice. I tried anything from telemarketing to mail shots to paid ads to referral networks, and some things work, some didn't. I did win some clients through networking and telemarketing, but some of these joined me on price, and after they got a call from another telemarketer working for another accountant, then they jump ship. People who join you on price will leave you on price. So it wasn't until I joined a mentoring program of one of my first mentors, and I heard that actually to get clients, you've got to specialize, and you've got to put yourself out there as a credible expert. You've become an authority in your space. So I chose a property niche back in 2016, and he told me, look, write a book, and it doesn't have to be War and Peace, but just to write a book answering the questions of your target audience. So I did exactly that. I wrote a book which was called All Your Property Tax Questions Answered. It's 130 pages. It went through just answering the most common questions that I was getting from my property owners in my client base. Now, I had other clients as well, but I decided, but property was the first one that I chose. I had an interest in it. I just started to buy my own buy-to-let properties. So I thought, okay, let me kind of heed this advice and see what happens. So I wrote a book. I did some YouTube videos, and it was astonishing when I started to put myself out there as the expert in property. Now, I wasn't the country's leading expert. I am not, super brains when it comes to these things. I just got good at marketing. That's all. So I was able to put material out there, lead with value in advance. So when people seeing that, when they were searching on Google, when I was sharing on social media, I started to create this authority, this credibility in this space for anyone with a property portfolio, that I was the go-to accountant for them because I was a specialist in this area, and they could see that I was adding value. I was answering the most common questions. I could, so people want to work with specialists. And when you do that, then work comes to you instead of you having to go and find it. And having done that, then I started to get some awesome inquiries, and we started to win big fees. As you can see on here, £29,000, £40,000, £32,000, which ordinarily this work never used to come to me because I had done nothing to project my credibility or authority in this space. And I even went and my bosses at PwC would have been proud of this one, that managed to earn a six-figure fee from implementing a property exercise on one of our property clients. And it's not just kind of winning one-off work, but when you get this right, you can start to charge for initial consultations. When you have a particular amount of expertise and you're getting lots of inquiries through, you no longer have to give away initial consultations for free. You can start charging for them. I started charging $279 plus VAT for a 45-minute consultation, and that brings in around £7,000-8,000 a year. My team are doing this now as well. People are willing to pay for access to a specialist. So when you become a specialist, automatically you become more valuable, and people are happy to pay for initial consultations. And to prove this wasn't a fluke, then in 2021, I had started my mentoring program for accountants, and I said, well, I was teaching this stuff, and I said, well, okay, I've been teaching you this stuff for a while. Now, what I'm going to do now to really hit home is to start a 7-month program where I'm going to teach you everything that I know about marketing, everything that I've done in my firm in marketing to get those big fees for property clients. But rather than just teaching you, I'm going to do it with you. I'm going to prove this concept by setting up a brand new accounting firm with a new audience in a new niche, and everything that I do, I will share with you, and I'll share the results that I'm getting as well. So in February 2021, we started a brand new accounting firm. It was called Capture Accounting. The audience that I chose was content creators and influencers. At the time, and if you're thinking, oh, I don't have enough clients in a particular sector to niche, we had one client in that particular niche, but we'd worked in them for a couple of years, and I thought, well, actually, this is a growing space, and we quite like working with these creators because they allow us to kind of do everything, and we manage the full finance function for them, and they've got a business which I could see was going to be on the up as well. So we started Capture Accounting in 2021, and within just 15 months, it went from 0 to 120,000. By everything that I did. So as well as teaching it, so as the first thing to do is to actually choose the niche. The second thing to do is get your messaging right on your website. The third thing to do is to create something of value. So a lead magnet, an ebook, which as you can see here are created, and then sharing that to social media and everywhere you can, so you get people into your email inbox, into your email system, and then doing nurture campaigns to send emails out to these potential clients, inviting them for a call, and then over time that snowballs, and then creating more content, and then driving traffic to it. So everything that I was doing, I shared with my audience, and if it hadn't worked, it would have been a serious egg on my face, but thankfully it did. And it's continued to work. Now if you've seen my stuff on social media and I talk about getting inquiries on autopilot whilst I sleep, this is not hyperbole. This is not just marketing talk. This is actually happening. As you can see here are some screenshots from Calendly meetings that have been booked into my diary. You can see the times on these, 5:09 a.m. and 9 a.m. and 10:36 and Another one here, yeah, midnight. So literally whilst I'm sleeping, inquiries are coming in because there is a system that's been built on autopilot that allows me to get these inquiries booked into my diary from these specific audience, or all high paying and qualified inquiries. And as you can see here, these are the kind of fees that we are getting because we're the specialists. We're able to charge more. So these inquiries are then turning into big fees of 7,600, 17,000, 22,000, and it's just, once you've done the hard work, the marketing system, it just compounds from there onwards. And in the space of, we're now in 2023, that brand is now hitting sales of recurring sales of over 200,000 per annum. Not only that, but you get better quality referrals because now you've got a couple of clients in that niche, you can then reach out to them. Because chances are, if you are an accountant for doctors, they know other doctors. If you're an accountant for dentists, then they'll know other dentists. And if you're an accountant for property owners, they'll know other property owners. We niched down into content creators and influencers, and we knew that these content creators would know other content creators. This Mike Thurston was one of our first clients, and then we asked him to say, well, we want some referrals, and in their business, so we got a few referrals from him, and then from them, you can then ask their contacts for more referrals because they know other content creators. And it becomes so much easier when you are very clear on the kind of referrals that you want. It's much easier to get referrals when you can tell someone we're after more people like you, more content created influencers, rather than open-ended question, do you know any other business owners? It's very hard for people to kind of make a connection as to who you actually want. So the more specific you can get in your ask, the easier it will be for you, the person you are asking, to make a recommendation and a referral to you. And actually, earlier this year, this client of ours did a video and name dropped us into it, and we agreed a deal where we would pass him some commission for any clients that came that way, and that has resulted in more inquiries coming to us as well. It's not just our particular case, but also other specialist firms that I have interviewed on my podcast are getting similar results. Specialist firms grow faster, as you can see. If you've listened to my podcast, well, people like Joshua Tharby's in the property space. We've got Ben Steshka, who's got an e-commerce specialism. Got Stephen Pell, who's in the music industry. Shanita Jones, who's in the care industry. These are all specialist firms, and they've had incredible results in terms of growth over a short space of time. And if you're still wondering, do I really have to specialize? I like the variety and all that kind of stuff. Well, this is what happens when you don't. This is an example of someone who posted in my Facebook group saying, I received an email from a client. I'm not sure what to write back to him. And the client said, thanks for getting back to me. Really appreciate the discounted price. Can you tell me what's the difference between your service and the company attached to this email? And what they're referring to was this online accountant who's doing it for $299 plus VAT. Dirt cheap, ridiculously cheap. But the thing, when you don't differentiate yourself, this is what happens. You're being compared to a generalist solution like this. So this is why you need to specialize, because when you don't, then the only thing a client can compare you on is price, and that's never a good thing. So if you don't differentiate, the only thing you'll be competing on is price. And remember, there is no strategic benefit to being the second cheapest in the marketplace. So absolutely, if you want to be the cheapest, be the cheapest. Be like the Lidls, the Aldis of this world, where you are the cheapest and you set out your stall and your operations to be the price leader in the marketplace. But if you're not going to be the cheapest, there's no strategic benefit of being the second or third or fourth cheapest. Then what you want to focus on, premium. Focus on premium, focus on value, focus on being specialist to get those higher fees. Because for most of us, being the cheapest in the marketplace is not a feasible strategy. And why be something to everybody when you could be everything to somebody? So when you're a generalist, you're something to everybody, you're kind of working very wide across many different industries, not really being able to go deep. Whereas when you're a specialist, you go narrow and you go deep into one particular area. You get to understand everything about their business, about their books, all the particular tax angles. You get to understand the jargon, the lingo in the industry. You become a lot more valuable to them. When you become more valuable to someone, then you're everything to them, and you can charge a lot more for the privilege. You can do this too. All you need to do is get clear on who you serve. Go narrow and you go deep. Give value in advance, become the expert, and take advantage of this opportunity to reach clients nationwide. Since launching Capture Accounting, 0% of our new clients have been from within our local area. Pre-pandemic, we would have had maybe an 80-20 split, where 80% were around our local area, 20% weren't. Post-pandemic, it's about 2%. in our local area, and 98%, if we take our two brands together, have been from outside the area. Certainly when it comes to capture accounting, 100% of our clients are not in our local area and are all over the UK or the world, actually. So let me know in the chat box, you've been taking all this in, what difference would it make to you? I want to see that you're still awake. What difference would it make to you if you could get inquiries in autopilot? What difference would it make in your life? Let me know. I think Jonathan may have fixed the chat box. Someone want to try it? If you can, if someone tries it in the chat box, if not, use the Q&A box. Let me know, what difference would it make to you if you could get inquiries on autopilot like I've just spoken about? Before we move
just as an update, Reza, on the chat box, we've been working away in the background. I suspect it's probably still not working, but I have been able to receive a couple of private messages. So I don't know if even the chat icon is on the side, on the right hand side, and you can click it and to send a private message to the organisers. But if not, just keep using the questions box. That seems to seems to be working. Okay.
Cool. Yeah, so keep using the Q&A box. Let me know what difference would it make to your life if you were able to get your inquiries on autopilot. How would it make a difference in your life or your practice if you were able to do that? Would you stress? Would it kind of give you comfort? Would it make you more confident in your pricing? What would it be? What difference would it make in your life if you could get inquiries on autopilot? Let me know in the Q&A box. Quite a big thing for us, says Anthony. Great difference, says Roger. Undoubtedly accelerate our growth. Absolutely. So hopefully you've got some takeaways from there in terms of exactly what you need to do. So let's move on to insight number 2. What is the big opportunity that I speak of in terms of earning these high 5-digit recurring fees? So what is that big opportunity to earn to 10x your fees even in a recession? We're going to be talking about the what now. The first part was talking about the why now. Now we're talking about what is it? What on earth is it that we can earn big fees from? So let's take a trip down memory lane, the way it was. If you kind of go back maybe 10, 15 years ago, if you've been in practice that long like I have, then this was generally how it was. Most of your clients would have their data on a desktop, on Sage, or on spreadsheets or something like that. They may have an in-house finance bookkeeper. Essentially, the client owned the numbers. They would then bring you those numbers at year end. You would work your magic and churn out the year end accounts, a tax return, and send it off to the revenue and say, see you later, see you again next year. That was typically the model many years back. But there was a gap because many business owners, small business owners, needed access to somebody with the right financial acumen to help them in their business, because the right support can make a huge difference. And it was probably the reason why many small businesses got out of business in the first 5 years, because they were desperate for this financial input for growth, but they simply couldn't afford access to a financial controller, a bit of a financial director, and a bookkeeper and a finance manager. So what they ended up doing is making do with unfit for purpose financial staff. So they might have got a bookkeeper in house and expected the bookkeeper to give them, meaningful insights and strategic direction on the business, but that simply didn't happen. Or maybe they got access to a little bit of an FD, but then the foundations weren't there for the FD's advice to be meaningful, because the foundation of the books just wasn't in a position for them to do so. So they just kind of bumbled along, and that's why most business owners don't make it past the first 5 years, because they don't get the financial support that they need. And then along came the cloud software revolution, where we are now able to work in real time with clients. That has changed the game for us. And that means that we can work much closer with clients. We can essentially manage the full finance function of our clients from within our teams using the technology that we have. What used to take 5 or 10 people in an accounts department can be serviced by us remotely with 2 or 3 people, or even less, using the technology at hand. Things, the stuff that kind of Bright gives us, and Accountancy Manager, and QuickBooks and Xero, and all these things, and getting the app add-ons. We can now do what previously it used to take finance teams hours and hours and days and lots of people to do. Now, I actually came across this when I was sitting in a meeting with one of our clients that we did year end for, and at the end of the meeting, he mentioned to us that, oh look, our finance manager has handed in their notice. Do you know anyone that can help? And I didn't really know anyone at the time, but we had just implemented Xero in the practice. And this is probably going back to 2014 now. And I kind of had seen initially what it could do. So I thought, well, actually, I don't know anyone, but we could do it. And he said, really? I said, yeah, we've got software now that enables us to do it in real time. And, you know, we can basically now take over the finance function for you. He said, oh, I said, how much would it cost? And I said, well, how much have you paying your, you know, how much have you been paying your finance manager? And he said, well, 35,000 plus sick pay plus holiday and all the rest of it. I said, well, we could do it for 25. I had no idea whether we could service it for that much, but I thought, well, that's a big number. None of our clients are paying us that much. And if we got 25,000, we'd figure it out. And he said, okay. I was like, wow, okay, fine. And so we took it on, and lo and behold, we figured it out, and now it's a seamless process, and we still have that client. But it just goes to show that we can absolutely do this, and you can get high value fees by communicating value with regards to reference points that are greater than the price that you are charging. So when the client comes to see you, typically they're going to compare you to the last accountant. But the value you're providing when you're taking on board the full finance function is actually you're giving them access to a little bit of an FD, a little bit of an FC, a little bit of a finance manager, and a bookkeeper all in one, which ordinarily, if they were to go out in the open market to get access to all those individuals in-house, it's going to cost them way over 6 figures. Plus, they're still going to need an accountant to do everything else. So when you communicate the value of your offering in that way, and then come up with a price, which is 20,000, 30,000, then it still looks like good value, because that's all clients are doing. They're just looking for reference points. So we need to get better at communicating the value of our offering. So when the question of price comes, price is less than value, because the only thing that goes through clients' minds when they buy anything is the price I'm paying less than the value I'm getting. So we need to get better at communicating that value, increasing the perceived value in the client's minds for us to get higher prices for what we do. So what's the big opportunity? To take on board that full finance function, to move away from year-end work and actually take on the bookkeeping, take on the that role of managing that finance function. Because when you do, then the client is more integrated with you. The client is more reliant on you. There is more touch points throughout the course of the year. It's much harder for a client to go elsewhere. It's easier for the client to see value because they're talking to you, your team on a regular basis, and that is value. So I call it the virtual finance office, where there's this enhanced collaboration with clients. There's lots of value add. It's cost effective for clients. In an age where there's skill shortages and wage inflation, you're taking that headache away from them by being able to provide that with that one-stop shop, from bookkeeper to FD and anything in between. So now our VFO service, that I call it, Virtual Finance Office, is our most profitable service line. We're an extension of our clients' business. They come to us with their problems. We're seen as their trusted advisor, which we all say we want to be. So that big opportunity is when you own the numbers. Remember this, when you own the numbers, you own the relationship. Whoever owns the numbers owns the relationship. If you're in control of the numbers, you're in control of the bookkeeping, you own that relationship. If somebody has it in-house, like a finance manager or a bookkeeper, you don't have much contact with a client, it's, then you're just doing year end, there's little value for a client. So you want to get that in-house, or even you want to be at the top of the financial food chain. If they've got a bookkeeper in-house and you want to take that FD type role, so you are managing and overseeing that process and being that link from the numbers to getting the meaningful insights from the data to the client. Because when you own and control the numbers, you own the relationship, and that's very powerful when it comes to being able to charge the fees that you want and keeping clients for longer, because it means it's very hard for them to leave you. Clients want only one contact. They don't want to deal with a bookkeeper and an accountant. They want peace of mind. It's stressful enough running their business. They want a one-stop shop. So whether you're a bookkeeper or an accountant, you want to be in the position of at least managing it. So if you're a bookkeeper, try and get someone to do the accounting on the side for you, or learn how to do it yourself so you can also do the accounting piece. If you're an accountant, get the bookkeeping in. That is absolutely valuable in this day and age. So seize the opportunity, get to the top of that financial food chain, communicate the value by referencing the cost of hiring in-house. You essentially are becoming an extension of your client's finance team. So the idea is you want to move from one-year accounting to real-time accounting. When you do, then you move from low reliance to high reliance. At the moment, if you're just doing year-end, clients not really relying on you. That is, they could switch. Somebody comes and offers them year-end stuff for 20% cheaper. Why wouldn't they go? So you want to become highly reliant, because when you're doing their books, there's a lot more to it. There's a lot more at stake, and it's a lot more difficult for them to move when you are managing everything. You move from an obligation to a necessity. So they only do year-end accounts because they have to. If clients didn't have to do year-end accounts, why would they do it? It's pointless. It's historic data, right? We only do it because HMRC and Companies House tell us to. But actually, knowing your numbers knowing how, knowing whether you're able to make payroll next month, or knowing whether you're able to afford a certain, to recruit somebody, or knowing whether you can afford to make that particular investment through cash flow planning, that is a necessity. Knowing your numbers is a necessity for a business owner. So you move from obligation to necessity when you are doing the real-time stuff. You move from low perceived value, year-end accounts, just I've got to do it, so I have to do it. Clients don't associate much value to year-end accounts, to can't do without you. Oh yeah, absolutely. I need to know what my numbers and my margins are. I need to know whether I can afford this. I know that I've got my accountant at hand. I can go to them. They are indispensable to me. So you move from low perceived value to can't do without you. So on our journey, we got to zero in 2014. We thought we'd be in laggards, but I know that some still haven't to this day. 2014, we adopted it. In 2017, we used to be registered auditors, but I knocked it on the head because it was such a ball ache dealing with the institute or the scrutiny you get, and we weren't a big firm, so we didn't have that many audits. We maybe had about 5 or 6 audits that we did, getting the right staff to do it and all the stuff that you have to do. So decided to knock that on the head and pursue the VFO route. We recruited somebody who had a bit of an FC type background, and that's just gone from strength to strength. So now our average fees are over £10,000. Obviously, capture accounting has helped, but we do not miss not doing auditing. Auditing was, it was a ball ache for us, and it's not really valuable for clients. When auditors go knocking on the door, it's like, it stopped bothering me. But actually managing their finance function, it's highly valuable to clients, and we want to be doing stuff that's valuable, because when we do stuff that's valuable, we get appreciated for what we do, and the client sees us as an asset to them rather than a pain in the rear. And if you don't transition, what's going to happen? Well, once your accounting is dying in the sense that it's going to become commoditized. It's going to become there's going to be a lot of price pressure. You can see online accountants doing it through software. It's going to fall out the back end before long. So what does that mean? That means there's going to be price pressure. That's the only thing you're doing is low value in a client's eyes, and you're at risk of clients leaving you because they can't see the perceived value in your offering. So you rather earn less or lose clients to more forward-thinking accountants. And when you get this right, as you can see here, so if you've been dozing, then come back to the screen here, have a look at what is possible. So again, I'm showing this to you to motivate you and inspire you as to what is possible. These are some of the top fees that we are getting. And you absolutely can get similar fees like this. So we've gone from average fees, we used to have average fees around £1,000 to over £10,000 by doing more of this kind of work, managing the full finance function. And it's not just me, others like you have got similar results. Here's Bev, who's gone from charging all her clients the same fee of less than £200 a month to winning fees of £18,000 a year, £24,000 a year, as you can see here. By doing this VFO type work. The underlying delivery hasn't changed, but she's realized now the value that she's getting by being able to communicate it in the way that I have just described. Here's another one here. Sharon has gone from charging clients £300 a year to charging the same client over £1,000 a month through communicating the value of providing that full finance function. And here is another one. Here is Sharon Brower, who's not even an accountant, who's a bookkeeper, who's a qualified bookkeeper, doesn't do accounts, but she's getting fees of £1,800 a month. Only started her business in the pandemic. So I'm not talking, don't think that this is not possible. This is absolutely possible for you. If you're a small practitioner, if you're a solo practitioner, even if you're on your own, if you've even got 1 or 2 or 3 employees, these accountants are just like you, and they're getting these kind of results by implementing the kind of stuff I've been talking about. And there's another one from Tom, based in Ireland. He's getting fees of over £37,000 a year by moving and communicating the value of the VFO type offering. And the best one of all, my favorite, is Suzanne, who repriced one of her clients by communicating the value of the offering and got a fee of £180,000. Isn't that phenomenal? £180,000. Now, this is not mid-tier large firm. This is small practitioner. I think Suzanne had about 4 or 5 employees at the time. Now she's got about 6 or 7, and she's getting fees of £180,000. Now, I'm not expecting you to get those kind of fees, even if you got 10% of that fee, even if you got a fee of 15,000, of 18,000. What difference would it make for you in terms of the breathing space that you have, in terms of being able to reinvest in getting better people, in terms of reinvesting in your systems, in terms of getting somebody in to take the load off of you, so you could then focus more on lead generation or marketing and sales and have a team behind you that does the client service, if you were able to get these kind of fees and you weren't linked to the billing by the hour and trading time for money. So you can absolutely do this too. Move from once a year accounting to real-time accounting in terms of taking on the bookkeeping, the finance function, the high level internal finance activities. You want to reframe bookkeeping. Bookkeeping is, it sounds, it has a low perceived value associated to it. So don't call it bookkeeping, reframe it. Virtual finance office, full finance function. We're managing a full finance function. Talk about it in those ways rather than bookkeeping, because that sounds low value. Because you're not simply entering information into ledgers. You're actually putting in place an accounting system. What Xero and QuickBooks allow us to do now, 20 years ago, there would have been 5, 6 people, one person doing accounts payable, one person doing accounts receivable, another person managing working capital. Just because we can do all that a lot faster and smarter doesn't mean that the value is any less to what was happening 10, 20 years ago when clients had to employ 5 or 6 people to do the same thing. We're implementing an accounting system. We're not merely putting information into ledgers. So let me know, what difference would it make in your life if you got those kind of results? If you got the kind of results that you saw people like Sharon, Bev, and the other Sharon, and Tom getting, Suzanne getting, well, what difference would it make in your life if you got those kind of fees? Let me know in the chat box. Not in the chat box, Q&A rather. What difference would it make in your life if you got those kind of results? Let me know. All very quiet. Are you still here?
You've stunned them, obviously, Reza.
I've stunned them. I've stunned them. Okay. Well, if you're still kind of processing it, yeah, just add a comment. Let me know that you're still here. Let me know any feedback, any comments that you have on what you've just seen. That would be great, says Janisha. Thank you very much, Janisha, for mentioning that. Anybody else? What difference would it make in your life if you got those kind of fees? If you were able to move from the current average fees they're getting to earning the kind of fees, because you can see there's no difference between you and me or you and these other accountants that you have seen. Thank you very much. A few more comments coming in. Step away from the coal face and enjoy more free time. Invest in quality team members. Absolutely, Kelvin. More time for myself, says Roger. Yes. Life-changing, says Esther. It would be pretty amazing. I'm looking at growing the practice at the moment. This fits in so well with our needs, says Anthony. Would be quite life-changing. Seems such a clear way to grow your firm when explained. Would be amazing, says Susan. Absolutely, it would. Okay, let's move on to insight number 3. How? Now we've done the why now. We've done the what. Now we're doing the how. How do we charge higher prices to get better clients? Well, let's start off with this. When people who come to you on price will leave you on price. I learned this the hard way, as I mentioned. When I first started, I tried everything to try and win new business, networking, paid ads, telemarketing. I did get some clients, but I found that people came to me on price. When I used to get these appointments to drive around Southampton, telemarketers would get me appointments with business owners around the city, and I would meet with them. And when it came to the question of price, I said, I'll get back to you. And what I would do is get a copy of their accounts in that meeting, or get them to email it to me. I would then go through the copy of those accounts, have a look at what they were paying their last accountant, and then give them a proposal with a little bit less or a tiny bit more, depending on how confident I was feeling. And I was winning work, and I was getting excited. But actually, those same people who came to me on price a couple of years later left me on price. I learned the hard way. That is not the way to price that your services. People came to me on price. I had done nothing to demonstrate my value. So as we said, there's no point getting into a race to the bottom, because nobody ever wins. And as we said, there's no strategic benefit to being the cheapest in the marketplace, because contrary to public opinion, that your clients are not price sensitive. They are value sensitive. In anything we buy, we are not actually price sensitive, because if we were, for example, let me give you a very simple example. If your clients were truly price sensitive, they wouldn't buy their coffee from Starbucks and Costa. And I'm sure your clients buy coffee from Starbucks and Costa. Why? Because there are much cheaper ways of getting your coffee fix. You could go to the supermarket, buy a jar of Nescafe, and have it at home. Why do people fork out 10, 20 times the amount to buy a cup of coffee outside? Because they value getting a cup of coffee, the convenience, the aroma, the taste, the smell, whatever it might be. They value that more. So your clients are not price sensitive. Same with a mobile phone. There are much cheaper ways of getting a mobile phone. Why do people buy iPhones? There are much cheaper cars available to take you from A to B. Why do people buy more expensive cars? Because people are value sensitive. They're not price sensitive. So in any pricing decision we are making, any buying decision we are making, the only calculation going on in our minds, in your client's mind, is the price I'm paying less than the value I'm getting? So we need to focus on value, communicated value, perceived value, actual value, and then we can charge a higher price. It's got nothing to do with your costs, as we'll come on to see. So there are 4 fundamentals of pricing I want to take you through very quickly. The price comes from value, the prestige phenomenon, the contrast principle, and the power of context. So get ready to take notes. First one, let's look at the first one. Price comes from value. Clients don't care about your costs. You don't walk into Starbucks and think in your head, right, okay, well, the cost of those coffee beans is probably going to be around 20p. The unit cost of the milk is around 30 pence. The direct cost of the labor that I can see here is about 40 pence, and I attribute maybe about 10 pence of overhead, meaning I'm only going to pay £1.20 for my latte. I'm not doing that. You look at the price that's been presented to you and you make a judgment as to whether the price they are asking is less than the value you think you're getting. And if it is, you buy, and if not, you walk out. It's got nothing to do with costs of the supplier. So just like you don't care about the costs of anything that you buy, whether that be your coffee from Starbucks, whether that be a mobile phone, whether that be a car, whether that be a paper clip from Tiffany's priced at $1,500, you're not looking at the costs of the supplier. Or the only thing that you are looking at is value. Is it valuable to me or not? And if it is, I buy. And if not, I don't. It's got nothing to do with costs. So most of us, if you are still doing some kind of time-based billing, working out how much it's going to cost you, how much time, your client doesn't care about that. Client doesn't care how long it takes you to do anything. Client doesn't care about your costs. Client only cares about your value. They only care about what you can deliver for them. Now, it took me a long time for this concept to sink in. But if it does, then it will transform your mindset and you start looking at ways of, okay, well, where is the value that I add? What is the value that I add? How can I increase the value that I add? These are the questions you need to be asking yourself. Nothing to do with trying to work out what you're going to charge based upon your time, your costs, because clients simply don't care. We don't sell time. You know, if you're still doing timesheets, what is the reason we keep timesheets is, okay, we keep timesheets and then we charge the client what's on the clock. What happens in reality? We'll look at what's on the clock, and if we think that the client's not going to pay it, we make a write-off and we charge them what we think the client's going to pay. Or if we think the client's going to pay more, then we look at what's on the clock, we add a bit more, we charge that. What is the point? If we're only going to charge what the client is willing to pay anyway, why not just get the agreement at the outset as to what they're willing to pay and then do the work? What is the point of keeping time and timesheets? So the expectation versus reality is very different. The only correlation there is between price, there's no correlation between time and price. There's only a correlation between price and value. If you're doing high value work, like we just talked about, managing the full finance function, you know, providing them with access to a little bit of an FD and an FC and a finance manager, high value, you can charge a high price. If you're doing low value work, year-end accounts, low price. Only a relationship between price and value, no relationship between price and time. As Peter Drucker said many years back, this famous management guru, knowledge work is not defined by quantity, i.e. time, how long it takes you. Neither is knowledge work defined by its costs. Knowledge work is defined by results and results only. So the value we provide is the result, the outcome or solution to clients. So it's not really the accounts or tax returns we are doing. It's the access to you and your team to solve problems. It's the peace of mind you deliver, the stress you take away because of handling the client's compliance responsibilities, so they don't have to spend hours on the phone to HMRC to try and get an answer from them because you were taking away that headache. It's the money you help put in your client's pocket by helping them to save tax and show them how much tax you were paid. That's what they're paying for. It's the time you help save the client, not the time it takes you, but by taking on board the bookkeeping, by doing things, by being the agent with HMRC, you are helping them save time. That is valuable to them. And if you say, well, I can't possibly charge, but £1,000 to a client for a 30-minute job, why not? If you can do a job in 30 minutes, it's because it took you 10 years learning how to do it in 30 minutes. They owe you for the years, not the minutes. Okay, moving on to the prestige phenomenon. The prestige phenomenon is where our brain, pricing is a feeling, it's a judgment. It's got nothing to do with costs. When we see a price, we are trying to work out whether it makes sense for us or not, whether it's valuable to us or not. So your price is something about you. Our brains are wired to associate quality to things that are expensive, and that's why Louis Vuitton, Range Rover, Rolex, iPhone, they have high prices, and we automatically associate quality to them, even though underlying The components may not be, better quality than something else. I used to have a Range Rover. My wife drives a Volvo XC90. I much prefer driving her car than the Range Rover. And my car, the Range Rover, was always in the garage for some reason or other, rather than her car, even though mine was a lot more expensive. The underlying components weren't great, but Range Rover did a great job with creating that perceived value in our minds, and therefore we pay more for the brand, for the name, than regardless of the underlying components. Your price says something about you. When you are expensive, people associate the notion of quality to it. Similarly, when you are cheap, people associate the notion of low quality to it. Think about the last time you were searching for something inexpensive on Amazon, like a phone case. You're scrolling through and you're looking at, some are really cheap, like £3 or £4, and thinking, I don't think I'll go for that one because it might not be good quality. I might have to replace it in a couple of months. How? You made a judgment based upon the price you saw. Cheap price, you thought low quality. You see something more expensive, it gives you that comfort. Oh, it's expensive, it must be good. It mustn't be lasting me ages. It must be, bulletproof or whatever the case may be, because it's expensive. Your price says something about you. What does your price say about you? So that was the second one. Moving on to the third one, the contrast principle. So what does this mean? Means we are clueless about price. We have no idea whether a price is reasonable or not. So we're looking for comparisons all the time to be able to work out in our minds, does this represent value for me or not? And that's why we need to get better at communicating our value. Because without contrast, everything looks cheap or expensive. Because the area in our brain that makes judgments on pricing is the same area in our brain we use to make sensory judgments. So for example, we are not, we have no idea about absolutes, but we're more sensitive to differences rather than absolutes. So let me give you a very quick example. If I were to give you a bag of stones and said, how much does that weigh? You'd be hard pushed to tell me the exact weight of that, even though if you stuck it on some scales, you would know the exact weight. If I gave you 2 bags of stones, you could easily tell me which one is heavier, which one is lighter. So this area in our brain which makes buying decisions is the same area in our brain which makes sensory judgments. We're more sensitive to differences rather than absolutes. We're always looking for reference points to justify, and comparisons to justify our purchases. So for example, on here, the $1,000 steak. Why is the $1,000 steak on the menu? The $1,000 steak on the menu is not really to sell the $1,000 steak. They might sell 1 or 2. But the $1,000 steak is there on the menu to make you feel that spending $30 on a burger is reasonable. Because next to the $1,000 steak, $30 seems very reasonable, right? That is a good way of showing contrast. So how can you use contrast principle in pricing? Well, you can talk about the alternative cost of your solution, which is why I was talking, employing in-house. How much would that cost to the client? Talking about that then gives them a figure in their minds in terms of the alternative cost of that they need to compare themselves to, not comparing to what they're paying their last accountant. So you need to get them anchored to a much greater reference point rather than what they are paying their current accountant. What is the risk of continuing with the present accountant? What's the risk of penalty? So how much would you lose out in terms of either your own time or the risk? How much is it costing you not having up-to-date management information? How much is it costing you in terms of lost revenue potentially? How much time and energy are you spending doing the books? What's that worth? How much money are you losing by not getting the right tax advice? So you could be implementing X, Y, and Z, and that has lost you already. We've just discovered, £10,000, £20,000 in the last year. How much more will that cost you in the long run? And when you do that, you are able to use that contrast principle, which clients will have in their mind when it comes to assessing your price against the contrast that you have given them. Here's an example of Jeff when he used the contrast principle in presenting prices to clients. So I talk about giving 3 options where appropriate for one-off projects, and where he was normally going to charge £6,000, he got £17,000 with using the 3 options in terms of the framework that I gave. Very grateful. The last one, the power of context. The 4 fundamentals of pricing. We're on the last one now. Okay, tell me in the question box if you're still here. Let me know. Okay, how much would you spend on a bottle of Coke in a supermarket? Let me know in the question and answer box. So in the supermarket, how much would you pay for a bottle of Coke? Let me know. Quick few answers. Let me know. First couple I'll take, and then we'll move on to the next one and I'll ask you how much would you spend on the same bottle of Coke in a cafe. So how much would you spend on a bottle of Coke in a supermarket? Let me know. Very slow in the Q&A box, shall I just tell you? Okay, so say around £1.20. Yeah, probably is. The 75p is a bit dated. I don't know where I got that from. Coke, yeah, absolutely. £1.20, £1.50, £1, absolutely. Yep, that sounds about right. Now, how much would you spend on a bottle of Coke in a cafe? So that's the second one now. Bottle of Coke in a cafe. How much would you spend on that? Bottle of Coke in a cafe in Starbucks or Costa or somewhere else. How much would you spend on a bottle of Coke? Anyone volunteering? Bottle of Coke in a cafe. How much? £3 to £5. Thank you, Tanisha. Excellent. Good. Anyone else? Bottle of Coke in a cafe. £2, £3. Yep, absolutely. So a little bit more than what you'd pay in a supermarket. £3, £2.90, £2.80. Anthony says, Elaine, £2. Absolutely. Now, for that same bottle of Coke, how much would you pay in a 5-star hotel? How much would you pay for a bottle of Coke in a 5-star hotel? Same bottle of Coke, how much would you pay in a 5-star hotel? Okay, how much would they be selling it for? How much would they be selling it for in a 5-star hotel? You might not buy it, but how much would they be selling it for? People would buy it. £3.90, very specific. It better be all inclusive. So £10 with Shamsul, £5 with Kelvin. Yeah, £3.90, absolutely. A hell of a lot more than what it costs in a supermarket or in a cafe. It's the same bottle of Coke. Why is it different? Why do people pay more for the same bottle of Coke in a hotel compared to in a supermarket? It's all to do with the power of context. The way something is packaged, the look and feel of it makes a difference. The way with the experience that you get when you walk into an Apple store, automatically you're primed to spend more. The way that you feel when you go into a Louis Vuitton store or you go into a Range Rover showroom, you're prepared to spend more because of the look and feel around you. The perceived value is greater. You're not going to go into Louis Vuitton and ask for a discount because you've seen the similar bag in Primark. You're not going to do that. You're primed to spend more because of the look and feel of the store around you. As you can see in this particular example, same bottle of Coke, but we pay more because it's placed in a different environment. The same bottle of Coke in a supermarket is going to be a lot less than the same bottle of Coke in a hotel. So this is when we get to start talking about value. Value is like an iceberg, right? Before a client comes on board with you, a prospect comes on board with you, the only thing they have to go on is perceived value, which is above the surface. They have no idea how good you are. They have no idea how fast you are, how great you are at saving on tags and things like that. The only thing they have to go on is perceived value above the surface. What is the experience like of booking a call with you? What is the experience of that first meeting? What is the experience of me coming to your office? What I'm making judgments all the time based upon your online profiles, your website, the call booking process, the initial call with you or your receptionist, the confirmations I get before I turn up to your office, the experience I get in your office. Do I get served coffee in a mug that you got from an accountancy roadshow, or is it in a nice china cup associated with a menu and all the rest of it? There's a nice smell in your office, you know, it's all tidy, all very minimalist. You've got a nice boardroom with a TV. Or do I come in and it's chaotic and there's phones going off and there's paper stacked pile high and there's a stench coming on from the takeaway next door? What is it? These things matter. Don't belittle these things. Perceived value matters, because the greater the perceived value above the surface, the greater we're priming our prospects to pay us more when they come in, or get a higher price from our prospects, because they are making judgments all the time around our value. The actual value you provide is all below the surface. But until a prospect comes on board with us, the only thing they have to go on is perceived value. So we have opportunities to wow pre-meeting, in the meeting, and in the engaging and onboarding process. One of the ways I do this, that I share with my members as well, is I have brochures which I've printed, and also go through it with them with prospects on a Zoom call, where we talk through, for example, the virtual finance office offering that we've been talking about. There's a brochure so they can see it's productized automatically. Greater value associated with something that is productized. We go through, the problem, the alternative cost of the solution. Everything is in the brochure. We take them through it page by page. We take them through our solution. We show them what is involved in managing a finance function. All the different apps, because they have no idea what bookkeeping is. No one's actually presented it to them. No one's actually communicated the value of the offering. When you do it through look and feel, through brochures, and taking them through this journey, you're increasing the perception of value. And remember, when you increase perceived value, what happens? You can charge a higher price. because their value will change over time in terms of getting to know you, the look and feel of the journey of coming on a call with you, meeting with you, coming to your office, that initial meeting. Before you present the price, they're making judgments all the time. And their perception of value is either going up or staying the same, depending on what you are doing to increase your perceived value. So one thing you do is read a brochure, show and communicate the value. Again, making sure you go through what the benefit to them is of having that full finance system. So this is the brochure that I've created, that I use. I share it with my members as well. As you can see here, Ahmed used the brochure and got a fee of over £8,000 for providing virtual finance director services. Here is Rennie, who used the same brochure that I provide. I allow my members to copy and paste, and you have a Canva template where you can put it on your own letterhead and logo. And here is Rennie, who used the training and the brochures to get fees of over £31,000 for the services that he was providing. Here's another one, Aaron, who used the brochures to get a fee of over £10,000 for virtual FD work, all done remotely. And again, these are not, I mean, Aaron himself is not even a chartered accountant. He's AAT qualified. He's got a small team of 4 or 5 people, and he's getting fees like this. He's also niched down into the plumbing and heating industry. This is absolutely possible. Remember, as Maya Angelou very famously said, people will forget what you said, people will forget what you did, but people will never forget how you made them feel. It's about the experience we give to clients. We're in the relationship business. We need to wow our clients with the experiences so we can increase our perceived value. And when we do, we get higher prices. So you can do this too. Focus on value, not time. Because remember, price comes from value, not costs, not time. Increase your prices to reflect your quality. If you're cheap, that says something about you. When you're expensive, that says something about you. How do you want to be perceived? Provide contrast in your conversations to the cost of employing in-house or the tax savings you help realize. Using that third fundamental, the contrast principle, and increase your perceived value. The experience of booking a call with you, the experience of your social profiles, your website, your front of house, your Zoom background, your office, power of context. When you incorporate that, you increase the perceived value of your offering. So let me know, what difference would it make to you if you got those kind of results? If you were able to implement that, what difference would it make in your life? Let me know in the chat box. Okay, so I appreciate time is running out. Let me ask you another question then. Do you think this would work for you? So as a recap, if you did what I showed you, and if you got clear on the who and took advantage of the opportunity to reach clients nationwide, do you think this would work for you to get you higher value fees, to make more money, make more profit? If you reframed bookkeeping and started to offer that full finance function service, do you think you could get higher value fees, 10x your current fees, and be able to grow your firm? And in insight number 3, if you started pricing based upon the value you deliver, do you think this would work for you? You could get higher value fees, better paying clients coming to you compared to what you have at the moment. Let me know with a big yes in the chat box. Do you think this would work for you? Are you still here? If you're here, let me know. Would this work for you if you did 1, 2, and 3, the 3 insights that I've shared with you today? Absolutely. Yes, it will work, says Roger. Anthony says yes. Brilliant. Okay, so appreciate we're shorter time. And how many of you are a little bit overwhelmed because we've covered so much? Or how many are excited about what we just talked about? Now, it's impossible to show you everything in this brief 60-minute presentation or so, but I tried to cover as much as possible to give you some clarity on the way forward. But if you would like to spend a bit more time together, then I have something for you. Is it okay if we spend a quick 2 minutes going over something very special that I've created for you to get access to some of the stuff that you've heard me talk about? Let me know with yes in the chat box if you'd like me to spend 2 minutes going over something that will help you to shortcut your learning and implement everything that we have just talked about. Let me know with a yes, and if so, then I will tell you what that is. If not, then I already know this, so I can walk away right now. So yes, fantastic. Okay, brilliant. Okay, well, I appreciate Jonathan needs to come back, but I'm going to spend just very quickly 2 minutes on how you can quickly implement this stuff fast, and I'll share with you something in the chat box that will help you to do that. So I can give you access to what you need. Remember, I talked about the virtual finance office brochures, the virtual finance office director. I have a specific training that goes through exactly how to communicate the value of this offering, how to price the offering. Normally, the value of this is nearly £2,000. You can get access to that today. That is the what you need in order to be able to communicate the value of this offering and 10x your current fees. As you can see, people like Ahmed got fees of over £8,000. Aaron got fees of £10,000 using it. Rennie, you saw, got fees of over £31,000. The brochures are very easy to put on your own logo and letterhead. There's Canva templates. Literally within 2 minutes, you've got your own brochure. And within using the training, you can start to communicate the value of offering and get those higher value fees. As you can see, there's Michelle here who's done it. There's Shahod who's done it. So this is the what you're going to get. The how to do it, the how to get those higher prices. I have pricing structures already built in. I use GoProposal. I can give you access to my GoProposal pricing template. I've got some one-page pricing templates as well, with showing 3 options. So if you're not using software, you can use those to price it. So rather than having to figure out yourself how to build up your own pricing system, you get to quickly implement this into your own structure and start to use it straight away. As you can see here, some of my members who have got wins using the pricing system that I shared with them. We've got Bev, who's got a fees of over £800. Marilee's got a first £500 client, and Ahmed, who saved a ton of time using the pricing templates that I shared. So that is currently valued at nearly £3,000 of value that you could get. And the how. So the last one is the how. We covered the what, we covered the why now, and this is the how to find clients. As I said, in 2021, when I started Capture Accounting, I put together a 7-month-long program that I shared with accountants, and everything that I was doing from the messaging on the website. I put together a website framework that they can kind of insert their particular niche and pain points into, so they know exactly how to put together a 1-page website, how to put together a lead magnet, and I shared lead magnets that you can copy and paste. It's a 7-month-long program, £2,500 worth of value that other accountants paid. You can get access to that today absolutely for free for attending. I did say I was going to give you some very special bonuses today. As you can see, all of that. So there's over £5,500 worth of value that you can get. And I'm going to share with you a link in the chat box, which Jonathan will send around later as well, that you can get access to all of this by joining my Profitable Accountants community today. All details are in the link that I've just shared in the chat box. It's a monthly subscription, which is just £275. There is a very special discount available for you for joining today, which expires at within 24 hours. There's a link in the chat box so you can get access to all that value today, as I just mentioned. So click on the link and have a look, and if that is of benefit, then do come along and join the community. You can get access to what you need, how to get those high value fees, and network with other accountants that you saw that are doing this already to take that shortcut and get the results that you want without spending 10 long years that it took me to do the same. So I look forward to seeing you. If there are any questions, happy to take them now. But I know the reason why you're here is that you want to learn from my mistakes, and you're absolutely right for being here. And you are the sharp ones, because you're the ones that are going to learn from the mistakes of others. Okay, fantastic. I think that is it from me, Jonathan. So over to you. You can come back in again. If there's any questions, happy to go through them now.
That's brilliant. Thank you very much, Reza. And just before we progress, actually, I just want to run a quick poll, because obviously Reza shared some great content and everything that we've heard today, really inspiring stuff about how you can really enhance your practice. I just wanted to run a quick poll to make sure, do you want to hear more from Reza? And if you do, please just click yes now. And yeah, I can pass that over, because obviously Reza's got a great following online on LinkedIn and the likes. And yeah, it'd be great to be able to share some of that content that is provided with you guys. So I'm just going to give that a couple of moments to run now. But Reza, perhaps whilst the guys are completing that poll, I just wanted to touch on a question that came in. Well, the first one was from Roger, who said, "How do I get your brochure?" I think we've kind of covered that, and we will be sharing the links that Reza has referenced in the follow-up email that come up later today. But Reza, Rachel also asked, this was coming in when you was talking about niching. It was, if we are not already a specialist in an area, what do we do with all the existing clients if we decide to specialize?
Excellent, very good question. And the answer is, you don't need to do anything with those existing clients. It doesn't mean that when you start to look for clients in a particular niche that you close the doors to existing clients or have to get rid of your existing clients. You absolutely don't. Like I said, we had our firm has been here for 40 years. We've got clients in all different industries. But in terms of when it comes to marketing, it's very hard to get any traction when you're trying to be all things to all people. When you're a generalist, it's very hard for you to get noticed. And marketing is about getting noticed. If your message has to be compelling enough so that when someone sees your messaging, they can instantly relate to it. So for example, in the stuff that I share in the Capture Accounting website, the first thing somebody sees is accountants for content creators and influencers. If you're a content creator or influencers, you immediately feel that you're at home, you're in the right place. And when you feel like that, then you'll want to read closer down. And it's about connecting with, the problems and pain points in their head. So your marketing becomes so much easier when you do specialize, when you niche down, rather than trying to be all things to all people. So you don't have to turn people away. You don't have to get rid of existing clients. You just pick a niche so you can focus on. If you want growth and you want better quality clients and better paying clients, then it's absolutely to go narrow and to go deep.
Perfect. Thank you very much, Reza. Just make sure there's no other questions come in. Right, so I'm just going to run another poll. No, there it goes. I suppose it would be remiss of me not to just to ask, obviously, if you're interested in hearing more about any of our Bright products. Now, Reza's spoken about, a lot of times about way to value yourself, and let's not get bogged down. In fact, I saw a comment in the question box from Calvin that said he wanted to step away from the coalface to be able to get back to delivering better quality content. The Bright products that's absolutely what they're designed to do, is be able to provide you with a solution to actually, I suppose, eliminate or reduce the administrative burden of running your practice, to be able to get back to focusing on quality content that's deliver some valuable services to clients. That VFO solution that Reza's been talking about today. So just give that just a quick moment just to see if you'd be interested in hearing any more about our solutions that we provide. Reza, thank you very much for your time today. I think that's been really, really insightful. I found it motivating. I don't have a practice myself, but if I did, I'd certainly want to put my value before the fees of which I charge. I think that for me is probably my greatest takeaway from today's session, that your value should be more than your fees. So thank you for your insights. I think it's obvious that the audience has enjoyed the session that we ran today, and I'm hopeful that they'll be in touch with you, and you'll be able to work together.
Fantastic. That's great. Thank you so much, Jonathan, for having me. It's been an absolute pleasure. Appreciate it. And great stuff on all the good stuff that you're doing for accountants. So hats off to you, and hopefully long may that continue.
Thank you very much. And I also just want to say, obviously, a big thanks to everyone who watched the session and stuck with us with the chat box issue. In the end, I had two members of the team come on and had a look at it. I just don't know what was going on there, but we managed to use the question box well enough. So thanks for that. Excellent. Okay, guys, I'll wrap it up now. Reza, thanks again. Thanks everyone for watching the session today, and I'll see you all in the next one. Thanks very much.
Thank you, everyone. Take care.